We're jumping straight in today looking at the first quarter 2025 earnings from Robinhood Markets. They just released this yesterday, April 30th.
Right, and we've got their official presentation slides right here.
Exactly. So our goal really is just to sift through all the data and pull out the key stuff for you. What's going on with their performance, where they seem to be heading. Get the essentials without getting bogged down.
Yeah, exactly. Look beyond the raw numbers. Try to understand the story behind them. What's their strategy? How does it fit in the market?
Okay, let's dive in. First big thing, users. How many people are actually using Robinhood now? Sounds like a new record.
It is, yeah. They hit 25.8 million funded customers. That's a record for them.
Wow.
And it's up at 1.9 million from this time last year. Sequentially, so quarter over quarter, that's about 620,000 new funded customers.
Okay, solid growth.
Definitely. And interestingly, about 50,000 of those new ones came from that trade PMR acquisition they did.
Ah, right.
So overall, total investment accounts are now at 27 million. It really suggests, retail investing is still strong, and Robinhood's platform keeps pulling people in.
Yeah, attracting new folks. But what about getting existing users more engaged? Like Robinhood Gold, how's that doing?
That's a really key point, actually. Gold subscribers grew quite a bit. They're at 3.19 million now.
Okay.
That's up 1.5 million year over year. Huge jump. And 550,000 just since last quarter.
So the adoption rate is climbing.
Yep, it's now 12.4% of their funded customers. It really shows that the perks they're offering with Gold must be hitting the mark for, a growing chunk of their users. They seem to be getting better at turning those free users into paying ones.
Okay, that makes sense. Now, the number that always gets me is the total assets on the platform. That really speaks to their overall scale, doesn't it?
Well, absolutely. Total platform assets, they soared. $221 billion.
Billion, wow.
That's up 70% from last year, 70, and 14% just since Q4.
Huge numbers. And the trade PMR deal contributed a chunk of that.
It did. About $41 billion came from trade PMR. But what's also really striking is the net deposits.
Right, the new money coming in.
Exactly. A record $18 billion in Q1 alone. That works out to like a 37% annualized growth rate.
It's just incredible inflow.
And over the last 12 months, $57 billion in net deposits. That's a massive amount of money flowing onto the platform. Really shows user confidence, I think.
$57 billion in a year. That's staggering. Do we know where it's primarily coming from, like transfers from other brokers?
They gave a little color on that. In Q1, about $3.5 billion came in via ACES transfers, the system for moving accounts between brokers. And about $1 billion went out the same way. So a net positive there, suggesting they are pulling assets from competitors.
Okay. And what about revenue per user, ARPU?
ARPU for Q1 was $145 on an annualized basis.
Got it. Okay, so users up, assets way up, deposits strong. Let's switch to the financials, revenue and costs. How did that shake out?
So revenue looked good year over year. Total net revenues up 50% to $927 million.
50% growth. Nice.
But interestingly, it was actually down 9% compared to the previous quarter, Q4.
Oh, any reason why? Market conditions.
They didn't spell it out explicitly, but yeah, you could speculate. Maybe slightly lower volatility affecting trading, or perhaps a shift in user activity mix. Something to keep an eye on for sure.
And expenses?
Adjusted operating expenses were up 16% year over year, hitting $460 million. And up 7% sequentially.
Okay, so revenue down slightly quarter on quarter, expenses up slightly. How did that flow through to the bottom line? Profitability.
Well, adjusted EBITDA, that measure of operating profit, was actually up huge year over year. 90% increase to $470 million.
90%. Okay.
But like revenue, it was down sequentially, about 23% lower than Q4. Still, the margin was pretty healthy at 51%.
That's actual net income after everything.
Net income landed at $336 million. Which is, again, a really big jump from last year, up $179 million, but sequentially. Quite a drop. Down $580 million from Q4. Diluted EPS came in at 0.377.
That sequential drop in net income seems really steep. Did they offer any context for that? Seems like more than just the revenue dip.
They did, yeah. They pointed back to Q4 2024. They had some specific items then, like a tax benefit and a reversal of a regulatory accrual.
Ah, one-offs.
Exactly. Before those items, their Q4 net income was more like $492 million, and EPS was 0.54 cents. So that big sequential drop in Q1 25 makes a bit more sense when you account for those Q4 benefits not repeating.
Got it. Okay, that clarifies things. Let's look ahead. Their roadmap. What are they focusing on for 2025? Sounds like they have a lot planned.
They really do. It seems to boil down to three main themes. First, catering more to active traders. Second, grabbing more wallet share from the next generation, basically becoming their main financial hub. And third, building out a bigger global financial ecosystem.
Okay, so under active traders, what specifically?
They mentioned enhancing something called Robinhood Legend, rolling out futures trading finally, creating a hub for prediction markets, and launching Robinhood Cortex,
Cortex, what's that?
AI-powered investment tools. That sounds like potentially a pretty big step, using AI to help users.
AI tools.
Yeah.
Definitely interesting. What else is on the map?
Under their money umbrella, they're expanding the gold card rollout and launching something called Robinhood Strategies.
Strategies. Okay.
Corporate stuff, we know Trade PMR closed. They're continuing the Robinhood banking rollout and looking at adding more account types.
Right.
Crypto, more coins, more features, expanding geographically, and that Bitstamp acquisition they expect to close mid-year.
Still planning on Bitstamp then?
Seems so. And globally, they're talking UK brokerage expansion, an APAC launch, getting licenses in 3 more markets, and launching in Singapore. It's a lot.
It really does sound ambitious, like a lot happening at once across so many areas. Any risk they might be, spreading themselves a bit thin.
It's a valid question. Execution is key, right? They need to deliver on these things.
So how will they track if it's all working? What are their measures of success?
They laid out some key metrics. They'll be watching their market share in equities, options, crypto, and margin lending very closely. Also, net deposits, obviously, Robinhood Gold subscriber numbers, and then internationally, the number of funded customers and assets they hold outside the U.S. Those will be the main gauges.
Makes sense. We should also probably touch on their retirement accounts. That seems like a growing piece of the puzzle for them.
Definitely. Robinhood Retirement hit over $14 billion in assets under custody in Q1.
$14 billion already.
Yep, across more than 1.3 million accounts. The average account size is around $10,900. And that's before any assets potentially coming from Trade PMR get added in.
Okay, significant growth there too. Let's circle back to gold for a sec. You mentioned the subscriber growth, but they seem to be really pushing the value proposition.
They are. They kept highlighting the benefits. That 4% APY on cash, the 3% IRA match, lower trading fees, better market data, and the 3% cashback gold card that's rolling out.
Plus the new stuff coming.
Right, those future things like Robinhood Strategies, Cortex, the banking features, they're positioning those as more reasons to subscribe.
And does the data show gold members are actually more valuable customers?
Oh, significantly. The presentation showed gold subscribers hold about 5 times the assets compared to the average funded customer.
5 times. Wow.
Yeah, and their net deposit growth rate is 1.4 times higher. Plus, they're 4 times more likely to have a Robinhood retirement account. It's clearly working to deepen engagement.
And it's bringing in direct revenue too, right?
Yep. Annualized subscription revenue from Gold hit $152 million in Q1. It's becoming a really meaningful revenue stream and seems to be making users stickier.
Yeah, definitely sounds like a core part of their strategy now. What about how different groups of customers behave? Did they share anything on that, like people who joined at different times?
They did show a chart on customer cohorts. Generally, the longer someone's been a customer, the more their cumulative net deposits grow over time, which makes sense. But what was interesting is that the newer cohorts, the people who joined more recently, tend to start with larger initial net deposits.
So maybe attracting folks with more capital right off the bat now.
Could be. Might suggest a shift in who they're attracting, maybe more experienced investors alongside the beginners.
Interesting. And trading, actual buying and selling, was activity up or down?
Activity was way up year over year. Big double-digit increases. Equity volumes. The dollar amount traded up 84%.
84%.
Yeah. Options contracts traded up 46%. And crypto volumes up 28%. So strong growth compared to last year across the board.
But wasn't crypto down sequentially?
It was, yeah. Despite the strong year-over-year number, crypto volume did dip a bit compared to Q4.
Okay. So where's the money actually coming from, the revenue breakdown?
Transactions are still the biggest piece. That was $583 million, up 77% year over year, driven by all that increased trading activity in stocks, options, and crypto, though, again, crypto was the part that dipped sequentially.
Right. What about interest revenue?
Net interest revenue was up too, but more modestly, 14% year over year to $290 million. It was actually down about 2% from Q4.
Why the sequential dip there?
Well, they saw growth in interest from margin loans and the credit card stuff, but that was offset by lower interest earned on their own corporate cash and the segregated customer cash. Their total interest-earning assets did grow, though, to about $47 billion.
Okay, and the other revenue bucket?
That was up 17% year over year to $54 million. That includes things like the gold subscription fees we talked about and also securities lending.
Speaking of which, securities lending seems to be doing well.
Yeah, record quarter there, $71 million in revenue. And nearly 40% of that came from their fully paid securities lending program.
Gotcha. And they also seem focused on managing their share count, buybacks.
They are. The diluted share count actually went down slightly, about 0.5% year over year. They bought back around $322 million worth of their stock in Q1.
And they're planning more.
Yep. They increased the total authorization for their buyback program up to $1.5 billion. They expect to complete the rest of that over roughly the next 2 years.
Okay. Did they give any updates to their outlook for the full year 2025?
They did tweak the guidance for adjusted operating expenses and stock-based comp. The new range is $2.085 billion to $2.185 billion.
Why the increase?
Mainly includes about $85 million in expected costs from integrating the Trade PMR acquisition.
Okay. And that excludes some things.
Right. It excludes potential credit losses, any costs related to the upcoming Bitstamp deal, and importantly, any potential fines or settlements from regulatory issues.
Got it. How about that Rule of 40 metric people sometimes talk about? How does Robinhood stack up?
They highlighted that for Q1, on a last 12 months basis, their Rule of 40 score was 51%.
Which is considered pretty good, right? Over 40 is the goal.
Exactly. It's basically revenue growth plus profit margin. For them, it was driven by that strong 60% adjusted EBITDA margin, even though the 12-month revenue growth component was 11%. So strong profitability boosting that score.
And overall, their financial position sounds pretty solid.
Extremely solid. They have over $4.5 billion in corporate cash, investments, and stablecoins on their balance sheet. That gives them a ton of flexibility for growth, more M&A like Bitstamp, and returning cash to shareholders via those buybacks.
Right. They also threw in some monthly numbers for March, didn't they? Just a quick snapshot.
Yeah, those monthly metrics just give you a more granular, almost real-time feel for the trends in users, assets, deposits, trading volumes across the different asset classes, DARTs, margin balances, cash sweep, securities lending. Just a closer look within the quarter.
And that Trade PMR deal closed in Feb, just to recap the immediate impact.
Added about 50,000 funded customers and roughly $33 billion in assets right away.
Okay. And one last number. How much cash are users just holding on the platform?
End of Q1, total net cash held by users was $25.2 billion.
Okay, quite a bit. So let's try to wrap this all up. If you had to boil it down, what are the main takeaways for you, the listener, from this Q1 report?
I think the big picture is strong year-over-year growth, pretty much across the board. Users, assets, revenue. The success of Robinhood Gold really stands out, as does the big jump in trading volumes, particularly equities and options.
Yeah, gold seems key.
Definitely. And the acquisitions Trade PMR done, Bitstamp pending, show a clear push towards broadening their services and going global. Now, there were those mixed sequential results, with some numbers dipping from Q4.
Right, the sequential dips are important context.
But the overall trend still feels positive, especially with that strong balance sheet and their plan for using that capital on growth and buybacks.
And for you listening in, I think an intriguing thing to really mull over is just how successful Gold has become. Look at how much more engaged those Gold subscribers are, how many more assets they hold. It really shows Robinhood's figured out a way to deepen those customer relationships, not just acquire new users.
That and the sheer scale of the trading volume increases year over year. It's a strong signal about retail investor activity on the platform.
Yeah. And why does this all matter to you? Well, understanding how Robinhood's doing gives you a really good pulse on the health and the trends in the broader retail investing world. This deep dive gives you that snapshot of a major player's strategy and performance, which helps build your bigger picture understanding of financial markets and platforms.
Definitely.
So maybe a final thought to leave you with. As Robinhood keeps pushing out things like these AI investment tools, Cortex, and expands more aggressively around the world, how could that reshape personal finance and investing access for the next generation? What new opportunities or maybe even challenges might pop up as things keep evolving so fast?
It's a fascinating question. The landscape is definitely changing.
Absolutely. Well, thanks for diving deep with us today.